You're sitting in the back of a hotel conference room. The speaker just showed you a deal. $150,000 purchase price, $40,000 in repairs, $250 after repair value. The numbers are on the screen. The student is on the stage. Everyone's nodding. And you think, I could do this. And maybe you can. But here's what nobody told you when you walked through that door. Feeling ready isn't the same as being ready. Because in real estate, confidence doesn't protect you. The numbers do. And if you don't know how to read the numbers yet, the wrong deal can make that seminar high disappear very fast. If you're new to real estate, this is easy to miss. At a seminar or workshop, the strategy sounds simple. You find a motivated seller. You buy under market value. You fix the property, sell it, rent it, and build wealth. When a speaker walks you through a clean example, it can feel even clearer. But if you've never run deal numbers yourself, you may not notice what's missing from that example. Selling costs, building costs, loan fees, insurance, utilities, permit issues, contractor delays, buyer demand, appraisal risk, vacancy. Suddenly, the simple example isn't simple anymore. And this is where beginners can get hurt, not because they're careless, because seminars often teach the concept before they teach the calculation. And the concept feels exciting. The concept is easy to understand. Buy low, add value, create spread, and get paid. But the calculation is where the truth shows up. A property isn't a deal because the story sounds good. A property isn't a deal because it has equity. A property isn't a deal because the seller is motivated. A property becomes a deal when the numbers work after realistic costs, realistic timelines, and a realistic risk. That's the part beginners need before they start making serious decisions. I'm the insider, and I've watched how real estate seminars make beginners feel capable fast. That's part of the sales process. If you feel confused, you hesitate. If you feel clear, you move. So the seminar has to make the path feel simple enough for you to believe that you can do it. But simple isn't the same as complete. When real estate education skips the numbers or rushes through them, beginners can mistake excitement for understanding. So let's break down what you actually need to know before you trust that ready feeling. Before you believe you're ready to do a deal, there are 5 numbers you need to understand. Number 1 is value. You need to know what the property is realistically worth, not what the seller says, not what Zillow says, not what the seminar example says. What similar properties have actually sold for in that market? And that means you need to understand comps, comparable sales. You're looking for properties similar in location, size, condition, bed and bath count, and age. And bad comps create fake confidence. If your value is wrong, everything else is wrong. Number 2 is repairs. This is where beginners often most underestimate risk. A house may need paint and flooring, or it may need a roof, HVAC systems, foundation work, electrical, plumbing, windows, cabinets, and permits. Those are very different deals. If you estimate $25,000 in repairs and the real number is $55,000, the profit disappears. You don't need to be a contractor on day 1, but you need enough knowledge to know what you don't know and to stop yourself from guessing. Number 3 is transaction costs. This is the part seminar examples almost always simplify. Buying and selling real estate costs money. If you're flipping, closing costs when you buy, closing costs when you sell, agent commissions, title fees, lender fees, and points. If you're holding a rental, loan costs, insurance, property taxes, maintenance, vacancies, reserves. A deal with $30,000 in profit on a whiteboard may not have $30,000 in real profit after expenses. The spread is where the analysis starts. It's not the profit. Number 4 is time. Time is a number. And beginners forget that. If a rehab takes 4 months instead of 2, you pay extra loan interest, you pay more in utilities, insurance, and taxes. If a rental sits vacant 60 days, that gets your cash flow. The longer you hold a property, the more things can change. The market can cool or change. Repairs can expand. Buyers can disappear. Rates can move. Before you feel ready, ask, what does each extra month cost me? Number 5, the margin of safety. This is the number that protects you from being wrong. And you will be wrong sometimes. Your repair estimate may be off. Your value may be a little high. Your timeline may be too optimistic. Margin of safety is the room between your expected profit and the problems that you could reduce it. No, a thin deal gives you no room to be wrong. If you're a beginner, you shouldn't be trying to win on the thinnest possible margin. Your goal isn't to prove you're clever. The goal is to survive your learning curve. That's the first major unlock. You're not ready because the concept makes sense. You're ready when you can explain the value, repairs, transaction costs, time, and a margin of safety without guessing. If you want help slowing down before a seminar makes a deal, a course or coaching offer feel obvious, download the free Seminar Survival Guide in the description below. It'll help you spot the pressure, ask better questions, and avoid making expensive decisions before you understand the math. Now, let's look at how seminars create that ready feeling in the first place. Here's the insider breakdown. Here's what they showed you. They show you clean numbers, a simple purchase price, a simple repair budget, a simple after repair value, and a simple profit number. They show you the exciting part of the real estate, the spread, the check, the before and after photos, the student who took action and made it work. And when it's presented well, it feels understandable, and that's the point. If the example feels simple, the opportunity feels closer. Now, what they leave out? They may leave out how value was confirmed. They may leave out the exact comps. They may leave out repair surprises, holding costs, financing terms, selling costs, permits, or delays. They may leave out the deals that didn't work, the offers that were rejected before the winning deal happened. And they almost always leave out this. One good example on a slide doesn't mean every beginner can recognize a good deal in the wild. A deal on a slide is already cleaned up. The real deals are messy. What you actually need to know, a seminar example shouldn't make you feel ready to invest. It should make you feel ready to practice. When you see a sample deal, don't just say, that makes sense. Ask, can I run this myself? Can I find the comps? Can I estimate the repairs? Can I account for the selling cost? Can I stress test the timeline? Can I tell where the deal breaks? If you can't do those things yet, you're not behind. You're just not ready to risk serious money, and that's okay. The goal is to learn before the mistakes get expensive. Now, here's a practical way to apply this before your next seminar. Pick 2 or 3 sample properties in your market. For each one, write down an estimated value with at least 2 comparable sales, an estimated repair budget, expected transaction costs, your best and worst case outcomes, and your expected timeline. Then stress test each deal. Would I still like this if repairs ran 20% higher? If it took 2 extra months? If the resale value came in 5% lower? Those questions will tell you whether you actually understand the deal or like the idea of it. This is how you build real confidence, not by clapping in a room, not by watching someone else win, by running the numbers until your excitement has to answer to reality. So if a seminar makes you feel ready, don't ignore that energy. Use it, but don't mistake it for proof. Let the motivation push you into practice, not into a rushed purchase or a risky deal. Now, before you make offers, understand your numbers. Before you trust a profit example, ask what costs are missing. Before you buy coaching or mentorship, analyze deals first. Download the free Seminar Survival Guide in the description below before you attend another workshop or a webinar. It'll help you spot when a seminar is just giving you real education versus just enough confidence to buy the next offer. And when you're ready for a lower pressure way to learn deal analysis and the strategies usually buried inside expensive programs, then take a look at the bulk. In real estate, confidence is useful, but clear numbers are what keep you safe.